So welcome back. So this is the first post that I had in on Sunday, August the 7th, 2016. This was shortly before I passed the combine, and I wrote the following: trading update plus lessons learned. A lot has changed in the last 5 months because in my last post I mentioned the importance to me of letting go of ownership and the urge to show rather than be. The ramifications of thinking we own anything are huge, both in trading and in life. And I've touched a few times on this subject. So if you go to the blog, you can read this yourself. I won't read the post verbatim, but if you go to the right side and go search this blog, you can just put the title in, which is Trading Update plus Lessons Learned. Even if you just put Trading Update, it'll probably give you one or two choices, and then you can click this one. So I talk about the momentum reversal and 8 years of chart study, and that I had completely let go of all of that and changed my methodology. So I was no longer scalping on a 15-second chart and no longer only looking at 5-minute bars, big 5-minute bars compared to the 15-second and 1-minute candles that I was looking at previously. No trailing, no break-even trades, very little management, no tiny risk to reward trades, just trading multiple markets and swing. I've called it intraday swing, this strategy, the GM strategy. So just leaving things to work out or not work over time. And that's gonna, of course, that's gonna mean sometimes, such as today, where I've just started trading this methodology. My 6B trade went 2.1 R in favor and then 3.2 R in favor, and I lost on both of those. So I'm down 2 R. But long term, that kind of stuff works. And so I say, not only have I let go of the method, that I've invested so much time, effort, and money, and I've pretty much changed every facet of my trading approach. So what are the lessons here? Larger stops and targets, as I mentioned in the last video, and that really triggered something in me because I realized that I was doing completely the opposite. Trade with if-then statements rather than we'll see what happens. So before you get in the trade, or at least soon after you get in the trade, map out your plan. If this happens, then that. And the statements have to be based off of something that you can quantify objectively rather than qualify, which is subjective. So if it's nearly, you have to be specific, number based. So I'll buy near that support when I see a reversal candlestick. It just isn't enough. You have to say how much is near. What statistical method are you going to use to say when a candle is near or not near? What exactly is a reversal candlestick? So these are the three main lessons that I had learned at that point. Something for you to ruminate over, and I'll be back with episode 2 in the near future. See you then.